A part of me wonders if the market, I'm talking about the S&P 500, the stock market just ripped and ripped and ripped. It bought the rumor ahead of the Fed meeting, and then it bought the news on the Fed meeting. The idea was, hey, we might get rate hikes. I'm sorry, we might get rate cuts. And then the rate cuts were confirmed and the market bought it again. And now I wonder if there's a bit of a pullback coming simply because all of the pump, all of the hype is kind of behind us right now. Could be a little bit of a corrective move coming in the S&P 500. I am bullish indices. I've got several indicators to tell me to be looking for long setups. I like US 30 if we can get a bit of a sell-off on that side. Gold getting a bullish reading here, guys. Love to see that. As I do have a position on gold and oil, and both of them are giving the not the green light, but the blue light on the edge finder for bullish setups. So I'll show you guys my current positions. We'll go into all of that. Keep an eye on these indices. Again, I mentioned Dow. Interested in a possible pullback on the Dow. I'll be watching this one for a potential long setup going into this week. Again, this pullback would give us, it's probably about a 50% retracement from the highs. So I don't mind looking for a pullback here on the Dow, watching that one into this week. I'm currently already long gold. I have a long position on gold, actually 2 long positions on gold. I bought first here, second here. I have 2 buys open on GLD, the ETF, and the gold spot price bouncing here off of this low. So happy to see that. We'll see if that can drive through up to the highs and perhaps break out again this week. But I think conditions still favor a bullish move for gold. The reason I would say that is because overall, we saw confirmations from the Fed of 3 rate cuts. Okay, 3 rate cuts still on the table. But you know what else was bullish for gold that didn't get as much attention? The Bank of England and the ECB followed suit. Okay, what are these? If you're a new trader, let me explain this in simple terms. Okay, this is the Bank of England and this is the European Central Bank. Now, we saw from the Fed, the big event that everybody paid attention to last week was the Federal Reserve, right? We heard from Jerome Powell. We saw the dot plot. The story is intact that rate cuts are coming, okay? That's the Fed. But what did we hear about in regards to the Bank of England and the European Central Bank? They also came out pretty dovish. Okay. In fact, if you're wondering, why did the dollar go up despite all of this talk about rate cuts, right? Rate cuts are supposed to be very bearish for the dollar, right? Well, they are bearish for the dollar, but the problem is for the dollar bulls out there, for the dollar bears out there, the Bank of England and ECB almost one-upped what the Fed had to say. They came out very dovish as well. So remember that the dollar index, if you guys are watching the dollar index, you have to remember that the dollar index is priced based on the strength or weakness of the euro, the pound, the yen. You can actually go look up the calculation behind the DXY. I'd encourage you to do so if you watch it. So here's the thing. The Bank of England and the ECB came out more dovish, okay? So how does this factor into gold? Well, it heavily favors gold to the upside because of all these central banks, not to mention
market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
The Bank of Canada also looking pretty dovish. All these central banks are talking about cutting interest rates. And rate cuts, dovishness across the board is an optimistic thing for gold bulls. So I could be wrong about this, but I think we're more likely to break out to the upside here than break out to the downside. That's why I'm still in my long positions. I like the fundamental story. I like the technical story as well. We've been consolidating here, but nothing has told me, hey, it's time to short this thing. It's nothing, I mentioned that a lot of people were probably going to get really bearish on gold just because they saw this candle. But this candle does not mean that we've broken bearish. We're still in consolidation. Price has been able to scoop and hold these lows pretty well. And as long as we don't take out those lows decisively, I'm going to stay in my gold long position. So what I'm looking for is a break through the highs. If that happens, I'll be looking to trail stops a little tighter, especially if we put in a higher low. I would love to see that this week. We'll see if it can happen. I'm also long oil, guys. For those of you guys who are in the VIP room, I picked this up last week. So where did my chart? Oh, there's my chart. Okay. So I picked up oil longs. Let me fix my chart here a little bit. So I picked up oil longs last week on this pullback, and both of these readings, US oil and gold, came from the edge finder. So I was bullish on them from a fundamental and a technical perspective. So I've got my oil position, I've got my gold position. I'll show you the P&L really quick. Pull that up, do a P&L check. So I am long, again, like I said, long oil, long gold. I took one loss on oil for about minus $900 last week trying to get into this. So yes, I'm up about 1,100, but about break even between the two trades on my most recent campaign on oil. If this market can run, that would be wonderful. If we can get a break back to the high, I'll look to trail stops, take my risk off the table. Dollar index, take a look at the daily chart. I'd be really interested to see, I just don't have we don't have the rate hike story that got me super bullish on the dollar in 2022. But what would be interesting would be to see if we can actually get a break through these highs. If you are a dollar bull, this would probably be you'd probably need some sort of new catalyst to get us to break through those highs. In my personal opinion, with the dollar index, I think upside is kind of limited. You might get a move up to this level here, but I don't see a huge conviction move past that point unless you get some sort of new fundamental catalyst. So right now, dollar index in a range. If you're taking a look at some of the currency pairs out there, Euro USD looking kind of weak here after the ECB conference, the summit. Pound USD still very choppy. You can see I just don't love this daily chart at all. Dollar yen's been trending well to the upside. In fact, I'm curious what yen pairs. Do we have any yen pairs on the edge finder? No yen pairs on the long side. Yen pairs, Aussie yen covering, Kiwi yen getting a bearish read. Look at this, GJ, look at all the pound pairs, guys. Pound pairs getting very interesting and pretty strongly in the red bearish signals on the edge finder. So that's kind of new. Let me go look at pound USD, for example, again. So pound USD on the 4-hour chart, maybe there's some pullback opportunities here. Daily chart, like I said, it's a little choppy, but in terms of setups here, this might be something to look into. Should be like a 50% retracement. Yeah, that could be interesting. Same thing with pound yen. Pound yen. Yeah, not a chart I'd probably want to short, to be honest. Pound CAD, not a pair I usually would trade, but I'm just curious. Pound CAD kind of pulling back, looks a lot like pound USD. Interesting. S&P 500 here. Market just opened, by the way. We're 4 minutes into the US Open here this morning. Here's your 15-minute chart. Looks like a little bit of a push to the upside initially. We'll see if that can hold. And again, look at that oil making its move, guys. Love to see that. Again, like I said, long oil, long gold currently. I've been in these trades for a little bit, but would love to see gold on the lower time frames. We've scooped here on the low. It's nice. We'll see if we can stay above this area. A little bit of a possible breakout for commodities this morning. The 4-hour chart is interesting because you had this beautiful breakout on the Fed announcement. pulling back here, but again, I made this point last week. I'm staying bullish on gold unless we break this low. And we didn't even make it to retest this area. Again, my stop loss is just below these lows on GLD. So there's my stop loss just below those lows, as I said. So yeah, commitment of traders data latest update was March 22nd. That was on Friday, shortly after the number came out. How does new sales impact on gold? Edgefinder looking awesome, by the way. Thanks, Lee. I don't really, well, okay, so it's not factored into the Edgefinder scoring new home sales, but strong demand for new home sales would probably be a good sign for the economy. So not great for gold, but I don't think that that's the biggest driver right now. I think at the end of the day, you know, you can get these kind of side pieces in terms of economic reads, but we still have like you could look at like a million factors if you wanted to. We've still isolated to the ones that we think are the most kind of important in reading the economy. And while we still plan to add some more columns and scoring to the Edgefinder, right now we only really score the things that we can see direct, very, very important stuff to the market. Anyways, commitment of traders data came out. This was part of the reason why I like the Dow. Big money went really long US 30. So US 30, big net percent change into the Dow. Same thing for the NASDAQ, same thing for silver, and love to see it for oil as well. So some demand on institutional side of things for some of the trades that I'm in. Same thing with gold. So gold and oil, very promising to see this. Silver, oil. So I like that. On the sell side, we have the US dollar, the Nikkei, the Kiwi, the ZAR, the Euro. So very interesting to see that.
But somebody is asking chat, like, what about Euro Pound? And I'm like, what about it? It hasn't moved price, or price has been range bound for a good, was it a month or two or 3 or 4? So it's not in those markets are not interesting to me because they're not trending. So that's my take there. But something that is trending, or should be trending, or might be trending, is Australian dollar, New Zealand.
Very nice.
We'll find another one. This is OANDA. Great, cool. So that's more a market that I want to look for a pullback in.
Yeah, that really is moving. You've got the Australian dollar versus the Kiwi dollar making a big move. What is this divergence coming from, Ivan? Why the big trend here favoring the Australian dollar?
I would like to tell you that there is a magic trick to it, but this one I'm not too sure. Other than New Zealand seasonally are weak around now, and I can't even explain that. So it's just a divergence between them that I have seen to have found that does it at this point in time of year. But why and how and in what way, uncertainty. I can't say for sure.
Yeah, that's a big trending breakout there. Do you have any trades on the dollar with either one, like Aussie dollar, Kiwi dollar, or do you have any dollar trades, period?
Do I? No, I don't think I do. Because Euro, I sold it, and then no, I don't have anything because last week it came kind of. I don't know how to explain this one, but this is kind of the markets where when something comes down 100% back to before the news, it kind of is a unsustainable move, meaning there wasn't any real buying behind it because I wanted it to go to 111. So I guess I'm a bit flustered.
Yeah,
so
the euro
that just makes me not do anything.
Somebody asked me about the euro earlier, and the chart is just really choppy to me. Like the daily chart is just not making any decisive moves here currently. But last week, Ivan, we had something kind of interesting. We had a lot of people were confused by the dollar move. And at first I was too, until you kind of get the full picture. If you look at, you have the Fed, they came out dovish. but then you had the ECB and the Bank of England also come out dovish. It kind of makes sense, right? The dollar index bounced because the other central banks matched or even one-upped the dovish sound of the Federal Reserve and Jerome Powell last week. Was that kind of your read on it as well? Is that why the dollar bounced?
No, my bounce was the PMI.
PMI as well. PMIs were strong.
Yeah.
But I think also, you had on Thursday the Bank of England and ECB as well. So it all reversed when I think, that story of, yes, the PMIs were significant as well. I think that also added to it is that, the Fed's not the only one that's dovish. So if they're all dovish, it kind of reset the play a little bit.
I can see people talking about gold, and my 2 cents on gold, I have been, before this, I was like, this is kind of like pausing. It can do a lot of different things. And I think this is what I can explain as this is a lot of different things. Because I was so surprised that the market and gold would give away so much in the pullback. Dollar got strong, fine, fair enough. But when you have these moves where you have 100%, for me at least, I have 100% pullback. You have a 650, 660 move. It's not, to me, that makes me, I don't know if it's an ick or it makes me like chill out and pause. Maybe there is something in my trading that is like, when that happens, it is such a failure and such a break of character that possibilities for anything opens up, and that what you need to I think that's what we need to teach ourselves, at least. The risk and the assessment of risk is also in many ways performed as technicals, and when I see risk increasing, you just need to like drop and let it go, and this one did it for me.
Yeah, and so Ivan, the dot plot that we got last week, which was kind of all the drama. Not only was the press conference a big deal, but also the dot plot revealed by the Fed still said 3 rate cuts are on the table for gold, and not for gold, for interest rates for this year. But to your point, about this pullback, why was there some violence in there? One thing that you could push back on if you're a gold bear or if you're a dollar bull is that they also said that in the coming years, 25, 26, they don't expect interest rates to come down tremendously further. So yes, there's some rate cuts coming this year, but they're not saying like, oh, we're going back to pre-pandemic levels. Like that doesn't seem to be the base case about any rate from the Fed. Like their goal is to, yes, we're going to see some rate cuts, but we're not going to go like sub 3% anytime soon. And so that kind of interestingly is, in some ways, it's like lower in terms of interest rates in the short term, but staying higher for longer in the longer term. So it's kind of a weird dot plot in that way. But I thought that was kind of interesting because everybody's kind of interested in the short term, like, oh, you're going to get rate cuts. But in the longer term, there was still this emphasis that rates are not going to come tremendously lower. Despite that, though, I think gold still has upside between the 3 major central banks that I mentioned just moments ago, the ECB, the Fed, the Bank of England, all looking to cut rates, not to mention the Bank of Canada and other places as well. I don't know. It'll be interesting to see if gold can continue to push higher. Ivan, would you trade gold? And if so, what would get you into a gold trade?
As we agree high, also as it says on my chart, higher for longer. That's still there. There's just nothing. There's no between us. There is no debate in understanding that we are going to cut. This gold will eventually go higher. I think I want more development of price. Also more price discovery. Because are we in that situation? Are we here? I feel like we are here. We have had like a spike, comes down, and then we might have another leg down before we then have a turnaround. So I think this is the best explanation of what I mentally looking for before I am looking for another buy. So for me, it doesn't, also, unless we make a brand new higher high and then we have a pullback. This is kind of what I'm expecting to happen next.
So would you be looking at like a 2080 pullback, that sort of thing, and then that's kind of an aggressive pullback for you, Ivan. I feel like you usually are more like looking for strong trending ones and then buying the short dips. Are you how would you buy gold? Like what would get you into a long setup?
What do you mean? Like, well, because I was thinking 2120 as just a brand new low, not like death.
Yeah, well, you mentioned like so this previous pullback that we saw, you mentioned this big sell off here.
Yeah, but that's
late early December.
Yeah. That's just it's still just 2100, 2120. So for me, what I kind of always look out for is price to come back down and bounce, and then so that would be either here or here. That one is that's where I would like to see. So there is kind of a double bottom there. It's a bit hard to see unless you're trained to see them, and you don't see them until they've already happened. But that's what I want to see. And going forward, this isn't the one. If you are very micro and if you have a lot of imagination, you can use that as a bottom, but that's not something I trade. But that could have been, but that's also just in the middle of a range, so that doesn't really apply to me. I need new downtrend reversal before going higher. So for me, it's not there yet.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.